Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. Thank you for allowing us to do work that we find meaningful. And thank you for giving us the most valuable commodity you have, your attention. We promise to do our very best to give you a return on it. Today we have our resident uranium expert, Justin Huhn. Justin exclusively studies the uranium sector and has a model portfolio that is up over 400% in 4 years. Justin, thank you for coming back on the show.
My pleasure. Good to see you again, Steve. How are you?
Oh, good. Doing just excellent. We're talking one of my favorite subjects here, uranium, so that's always a good day. Okay, we got a lot of listener questions here. Since we last had you on, you gave a forecast. I think the price of uranium was at like $93, and you said we're probably going to hit $100 by quarter 1 of 2024. And I think it was about 2 weeks later we exceeded $100. So spot on there, my friend. Well done. And maybe just give us a couple minutes on where we stand now on the macro uranium market.
Sure. It's the way that I think that I can sum it up most concisely is I think we're kind of right on the cusp of sort of a new paradigm for the industry, and it's a new pricing paradigm for the industry. I think that the industry is slowly coming to the realization that we aren't about to see the price crash back down to $50 a pound, which would be a crash, even though we were there 3 months ago, which is quite strange. It's been an enormous price rise in a very small period of time, and the industry is very, very slowly accepting that. And you can tell that the acceptance is slow because there's been zero uranium traded in the spot market for the past week. So the price is stagnating for a moment here at $1.05. It went down $1 yesterday from $1.06. No panic on my end from the $1 retracement after a doubling in less than 4 months. But I think the biggest theme here that is important to understand is that the primary producers of the world are having problems meeting their nameplate capacities. So we're talking about Kazatomprom and their joint ventures in Kazakhstan. We're talking about Cameco and Orano in Saskatchewan. And the greenfield and brownfield restarts that are slated to come online or are slowly doing so are also seeing and will continue to see delays, cost overruns, time overruns. So it's a structurally undersupplied market. It's going to remain that way for multiple years until new, very large projects come online. And those primarily would be a couple of new projects in Kazakhstan and NextGen's Arrow, and perhaps an expansion in some of the existing producers like the Uzbeks, potentially BHP if they decide they're going to ramp up Olympic Dam. But even if you calculate all this supply that could potentially come online, we're still structurally short. And the big difference between this market and the previous bull market or any previous bull market in this sector is that there isn't a buffer of secondary supply to aid the industry and to, let's say, keep the prices from going to places we've never seen or never could have imagined we would see. So we don't have megatons to megawatts. That was 20 million pounds a year for 20 years, 93 to 2013. We don't have the Russians dumping uranium into the market like they did, hundreds of millions of pounds in the 1990s into the early 2000s. We have very little enrichment underfeeding. Most of it's coming from Russians staying in Russia. The Russians are short. Everybody is short, Steve. That's the theme right now. Nobody has excess material besides the Chinese. And if you look at their build-out program and the fact that they have very little domestic resource, it's hard to even call that inventory excess. So we've yet to see any evidence whatsoever of excess liquidity being sold into the market right here. And here we are, $106 a pound. Maybe we saw a trade yesterday that dropped it, or somebody dropped their offer by $1 to see if anybody would bite. There's a stalemate in the spot market. There's a lot of contracting that still needs to happen, and there's not a whole lot of supply to get it done. So we're about to enter a period of time where nobody knows where the price is going to go and what is a pound of uranium worth. When there's multiple buyers trying to access that pound, that's what we're going to find out in the next 12, 24, 36 months, and probably on the sooner end of that spectrum.
Okay, so basically to summarize, you're saying that the two primary producers, Cameco and Kazatomprom, are not going to meet their targets, and they're not putting out as much as originally thought. until we get some big, mines coming online, like the one in Kazakhstan or NextGen's Arrow. That's not going to affect anything. And there is no secondary supply like there has been in the past, like megatons to megawatts, or maybe one country holding on to a whole bunch.
Right, exactly. I mean, nuclear utilities by nature hold some inventory, and part of the reason is for environments like this. The problem is that the U.S. utilities, for example, hold on average less than 2 years of inventory. That's not going to hold them over through this period of undersupply. The EU utilities hold an average of 3 years of inventory. That's not going to hold them over. So the utilities that are uncovered 3, 4, 5 years from now, and there are some that are still uncovered, they have to buy into this environment. And the producers are very, very short in available capacity for that time period. So what I think is going to happen is that utilities that are uncovered late decade and beyond are going to have to approach the developing companies, are going to have to incentivize those companies and potentially sign contracts that they're not going to like, by which I mean market reference with no ceilings. That's what we're hearing, that we're starting to enter into this extreme sellers market where the sellers can dictate exactly what they want. And what they want is absolute upside exposure, with no ceilings whatsoever. They'll put in a floor, no ceilings, no flex provisions, no nothing. And so that's really what's kind of on the table right now, and it's going to be a pretty exciting period.
Well, I love hearing news like that when I'm holding the commodity they want. That's cool.
Yeah, I hear you.
Okay. All right, let's get into the two 800-pound gorillas in the room, Kazatomprom and Cameco. Wolfgang says, first of all, congratulations on predicting Kazatomprom's production drop. That was pretty brilliant. Now, they've signed contracts, these two, into the future, right? And said basically, okay, yeah, we'll sell it to you for $89 a pound in 2025. And now that they may not be able to actually meet that contract, is there a chance that these companies could have to go into the spot market, purchase it at 110, and then sell it to these utilities for 89? Is that a risk?
It's already happening.
Ah, okay.
Yeah, it's already happening. The one caveat I would make is that contracts signed just a few years ago still had a portion of the delivery at a fixed price, but a portion would be market reference. So we haven't seen entirely fixed price contracts for a very long time. They've been at least partially referenced to the market. So it's not necessarily, not 100%. It's not a loss on the entire delivery, let's say. So if you're buying at market price and selling back to the utility market price, that's basically break even. But the portion of the contract that was fixed price, most likely you're going to take a loss on that. So yeah, the primary producers of the world are buyers. Everybody's a buyer here.
Okay. So that's already happening. Wow. All right. What um as far as Kazatomprom goes, do you think this is kind of a one-time off event? I mean, they've kind of consistently not hit what their projections are, right? But this one was much more severe.
Correct. Yeah, they've consistently missed on their projections. With I would also say with a caveat there that their updated projections, when they actually revise down, they've been able to meet that, not last year, but the few years prior, when they were revised down to that 20% below their subsoil use contracts, they've been able to get close to hitting that. But as far as their projections from the mid 2010s, this is what we're going to be producing in 2022. Like, that's obviously didn't come close. They adjusted those projections. What they told the market was that those projections were adjusted because they were being more market friendly now that they became 25% publicly traded in 2018. So they've had this value over volume mantra that they've been stating for years. And essentially that was true. I mean, they voluntarily cut their production guidance, and then we're pretty close to meeting that guidance year over year up until this last year. But how much of that actually has to do with structural challenges in their production is anybody's guess, right? So you can take what they say at face value, or you can kind of read into what they're saying. And most of the time, you kind of have to do that when you're investing in the resource sector, because companies are going to tell you in their presentation the absolute best case scenario, and then they're going to forecast and they're going to tell you what you want to hear. But you also have to kind of read between the lines and sort of figure out what's actually happening. So to give some color on the recent announcement from Kazatomprom that was, I believe, a little less than 2 weeks ago, they basically highlighted sulfuric acid shortages and some development delays in new projects for the reasoning why they are unlikely to hit their 2024 and 2025 production targets. So to remind your listeners, 2024 target they had at 25,500 tons. So to give them some idea, this past year they produced about 22. I think they're actually going to miss that a little bit, somewhere around 22,000 tons. So 3,500 tons. You take a ton, you multiply it by 2,600 to get the pounds. So what is that? That's 8 million pounds. 8 million pound jump 2025 over 2024 over 2023. And the reason I was able to, and it wasn't just me, I was perhaps the most vocal about it, but a lot of people that were looking into Kazakhstan could see this really clearly as well, which is you just look at their books and you look at what their CapEx was for the previous quarter. Did it jump? Was it flat? And in Q3, they revised down their expected CapEx for 2023. So they're going to revise it down. They're not going to increase production. You can't increase production without actually increasing the number of well fields you establish and the amount of sulfuric acid you put in the ground. So you have to actually grow in those ways in order to grow the pounds that are being pulled out of the ground, unless you have a deposit which is extraordinarily higher grade or there's something different about the geology. At this point, that's not the case in Kazakhstan. They've high graded. They've gone after the best deposits first and the best part of the best deposits first, just like any mining project does in any commodity. So seeing that they revised their CapEx down, we knew for certain they would miss 2024. It was not even a guess or a prediction. It was just, it can't happen. So it's not going to happen. And they're telling the market sulfuric acid shortages, development delays. So are they actually short sulfuric acid, or what really is going on here? So in our estimation, what's going on is their legacy deposits that they've been producing on for the last, in some cases, many years, in some cases, a few years. Those were high graded and are declining. So you're seeing decline rates, and that's something that happens. It's not a unlimited resource, right? You see decline rates across mining projects, period. And when the rates are declining and you have a absolutely stuffed contract book, and every single delivery you've made in the past 24 months has been flexed up on by utilities. So utilities that had those flex provisions in previous contracts that allowed them to receive 20% in either direction of the amount of uranium that they contracted for, they've chosen to flex up. Why? Because part of that contract was at a fixed price at $35 or whatever. And right now spot's 100. So if you can flex up 20% of the material you're receiving, which is allowed in your contract, you can do it all day long. Every single utility has done this with every single producer, and Kazatomprom is no exception. So they've been flexed up on. Their inventories are declining. Their near-term and mid-term capacity is beyond full because of these the flexing up of the utilities. So they've got this stacked contract book. They have no wiggle room to slowly abandon these legacy deposits and move into these big new deposits. The Budenovskoye 6 and 7 is a monster. 49% owned by Rosatom. The first 5 years of production from that mine is 100% going to Russia from the Russian side and the Kazatomprom side of that joint venture. All of it. So it's doing nothing for the West. So the West is thinking, oh, Kazatomprom is just going to ramp and we'll be all good. Well, 2/3 of that ramp is coming from this mine where the first 5 years are going to Russia. Okay. And after that 5 years, Kazatomprom is already selling 60-something% of their book to China. So what's left over for the West? It's crumbs. So they're not a savior to the West whatsoever. So we've got decline rates in existing deposits. That takes more acid. You have to use more and more acid to maintain production in a declining deposit. That's part of it. The other part of it is actually establishing these new deposits. So that's Budenovskoye 6 and 7. That's the South Tortkeduk deposit, which is a joint venture with Orano. Those are kind of the two big ones. Budenovskoye is substantially larger. Takes a lot of acid, takes a lot of labor, takes a lot of increased capex to get these new deposits on the ground. So basically, they're being squeezed not by price, but by their own contract book and their own clients that have all flexed up on them. So it's going to take time and money. Luckily, at $106 a pound, they're making cash hand over fist. But as we're about to see, Capital is not the problem here. For Kazatomprom, for any company, the capital is flowing. The problem is time. It just takes time. So Kazatomprom is building their own sulfuric acid plant. They say that that will be operational in 2026. That is going to help, which means if it is built and functional on time, then you can see a big increase in sulfuric acid production and injection into the ground in 2026, which means 2027's production will see a jump. That is yet to be seen, but that's theoretical at this point. So we've got 3 years, 3.5 years until we're going to see a big jump in Kazakhstan. That's my estimation. Until and unless we see evidence of increased imports of sulfuric acid. So it's not like there's no acid out there. And there's some takes going around that Kazatomprom is done, it's over, they've got no uranium, like that's all BS, okay? They've got a ton of uranium in the ground. And they, out of anyone in the world, can increase their production easier than anyone else. So they're still the biggest producer. They will be the biggest producer. But you have to see that jump in CapEx and the jump in sulfuric acid importing and or production later in order to expect an increase in production of uranium 12 to 18 months after that. So just look at their books every quarter. You see a 20% jump in CapEx, 12 months from then, we'll see a little bit more uranium out of the ground. That's all you have to do. It's really not rocket science. So they can't save the market is really the big takeaway here.
Okay, so basically, what I hear you saying is that they they reduced their production, I guess, by about 8 million pounds, which is something like 15 to 20 nuclear power plants supply per year, and they've gone after the good stuff first. So, like any miner, you take the easiest stuff to get first, and then after that, you start going down the little veins and trying to get less. And you predicted this by looking at their capex, projecting that out a year from now, and also their imports of sulfuric acid and other stuff they need to mine.
Yeah, pretty much, Steve. I mean, I'm not saying they're not going to have any production increase whatsoever for 2024. We might see Q4 that in October and November, they increased CapEx unexpectedly, and we'll see some increased production towards the end of this year. It wouldn't be miraculous if they were able to pull another 1,000 tons out of the ground, another 2 or 3 million pounds in addition, above 2023. That's entirely possible, but it's certainly not going to be 25,500 tons. And the prospect of 30.5 to 31,500 tons or 80 million pounds for 2025 is laughable. That's not happening. 100% it's not happening. So they're going to miss that, and they're going to miss it in a very, very big way. Their conference call for Q4 and for 2023 is next week on February 1st. And they're going to, so the messaging they put to the market a couple of weeks back was just letting the market know, hey, we're going to miss this year and probably next year, essentially. Now with this conference call, they're going to actually give us some hard numbers on what they expect to produce. So this is going to be a big signal to the industry. Utilities will fully understand what is actually on the table. And I think that they'll still probably put on a brave face for 2025 in terms of a drastically increased production expectations. Like I said, they're not going to hit it, but they'll still say it. So the utilities can get an idea of numbers to expect for this year and probably some more color on the actual challenges that they're having. And so we think between Kazatomprom's conference call on the 1st, Cameco's on the 8th, that the industry will get a better picture of just how real this situation is, and a full realization that we're not about to see the price crash down because we're in a structurally undersupplied market with very, very tight supply. Existing producers or buyers. The people that are supposed to be selling the market excess uranium are competing with their clients. That's crazy, right?
I think that's amazing news. I think that's so awesome. Okay, let's see. Let's move on to, we've hit a lot here on Kazatomprom. Patrick and Kurt want to know, how's the coup in Niger looking? Any updates on that?
It's starting to stabilize. It's starting to stabilize. I think it was Benin, the neighboring country, that is officially accepting the existing junta as a legitimate power in the country, let's call it. If I recall correctly, there was a little bit of a shakeup a couple days ago when they missed a bond payment. This should be expected when the country's being sanctioned by their surrounding neighbors, but it's slowly normalizing. It's slowly normalizing. It's still going to cause production misses for the French with Somer that's operating in the country and has been operating in the country for 30 years. So they had to shut down production. They didn't shut down mining because they were still able to continue to extract ore out of the ground, but they shut down production of uranium in November. I don't believe that's been restarted. Primary reason for that because they couldn't import sufficient reagents to continue that production. So it's going to affect our numbers. The French are not in a great position right now either in terms of uranium production, and that's one piece of it. And what is it, 4 or 5 million pounds a year out of Niger for the French? But there's also, I think there's a small offtake for a trader that comes from Somer, and the French also, UG is their trading arm, Orano's trading arm. They have been relatively consistent spot market sellers over the years. They're not now. They're actually the buyers, just like everybody else is. But just this small amount of uranium, 4 or 5 million pounds a year, interrupted for a few months, it's shaken up the market in a pretty significant way. Whereas 3 or 4 years ago, 4 million pounds, 5 million pounds a year, cut off for a couple of months, so 1 million pounds, 2 million pounds maybe, wouldn't have done anything. And now it's meaningful, and I think that's a big indicator of just how tight this market is.
Okay. All right. So it's not helping, and it certainly trimmed production in that country, but it is starting to stabilize, and as time goes on, you see that it'll get better.
Yeah, I think so. I hope so. I mean, if anything, especially for the people in the country who are, it's like, if not the poorest, it might be behind Haiti. It's one of the poorest countries in the entire world. And this coup and the sanctions against the country did not help. So hopefully it stabilizes for that reason. Of course, there's Global Atomics DASA is the preeminent near-term greenfield producer in the uranium world. So there's some brownfield restarts that are happening on a small scale. Boss's Honeymoon, Encore's projects in Texas. Maybe between the two of them, we'll get 1 million pounds, 1.5 million in 2024. It's negligible, but it's something. But DASA is 4-ish million pounds a year. It's a decent sized mine. It's high grade, and that the market was expecting that in 2025, and that's not happening. The coup probably delayed that project by a year. So the company is still saying late 2025 is possible. I think that's very, very optimistic. So most likely that'll be 2026 production out of DASA, and they have some forward contracts they have to fulfill into as well. So it's not like all that uranium is all of a sudden going to get sold into the market. It's not. So yeah, just to see that this is a very, very long-standing uranium production jurisdiction that has been impacted this past year. So it calls into question one of the projects that the market's relying on coming online, at least in terms of timeframes.
Okay. All right. Let's see. Let's move on to SPUT. So the Sprott Physical Uranium Trust, just a warehouse full of yellow cake and drums. Jay-Z wants to know, could you recap how SPUT processes investor sales, such as you expect in the URA rebalance? I assume they can find these from cash holdings, but what are the mechanics if an investor sales are excess of cash that the fund holds? Would they sell a portion of the fund's uranium holdings?
No, they don't sell uranium. In fact, they can't sell uranium. It would have to go to a shareholder vote in order for that to happen. So they've operated in a couple different manners in the past when it comes to relatively large selling that has been forecasted. They can arrange block trades off the market. And so they have interested investors, and they can say, hey, we've got 100,000 shares for you if you want. They can do that, or it'll just be sold into the market and they'll just deal with it. SPUT has great liquidity. It's never really been an issue. They are trading at a decent discount to NAV right now. It's not as large as Yellowcake's discount, but it's there. They did abandon, at least for now, their physical redemption mechanism. Unfortunately, we were hoping they would continue to pursue that, but after talking to Mr. Chipaglia, it's a challenge. They would have to get 2/3 of investors, not just to vote yes. Okay, so a lot of investors don't want a physical redemption. They don't want SPUT to ever sell uranium. I'm not in that camp. I think the physical redemption mechanism would have been and could still potentially be an awesome feature for this vehicle because it would be limited to certain players, people that are existing in the industry, utilities and traders. It would have annual limitations, so you can only do X amount. It's not like you could just buy trust units hand over fist and redeem them for physical. It would have limitations in quantity. It'd have limitations in time. You could only do it so often. But the big thing is that if you bought it at a discount, you would redeem it NAV. So it would basically glue the SPUT vehicle to NAV, which ironically would mean it would be a hell of a lot easier to just push it as an investor to a premium, and then they could be in the market buying. So on balance, we think it would actually balance off, or maybe they would even buy more than they would be redeeming. So we wanted it to happen, but I understand why they didn't go after it. It'd be a very, very painstaking and expensive process for them to garner 66.6% of the outstanding shares as a yes vote, which means they'd probably have to get 4/5 of their entire shareholder base to actually vote to get a 2/3 yes vote. It's possibly an impossible undertaking. So I understand why they didn't focus on it right now, and we'll see. I think we'll be able to, and within a week or two after they abandoned it, they went to a premium again. I don't know if you saw that. They raised 50-something million dollars in a single day. So I think when sentiment improves and when it swings to the upside, SPUT will swing closer to NAV and it'll be fine. But long answer short, they don't sell uranium ever.
Okay. So as far as if they have if sales are in excess of cash, they got plenty of cash. That's not an issue, and they're not going to sell a portion of the fund's uranium holdings. And in order to do so, they need 2 out of 3 of us to vote yes on that. The undertaking of that is just not going to happen.
Yeah. I mean, and there's always people with questions like, well, what if we get into a situation where a nuclear power plant's operation is threatened and the government forces SPUT to sell uranium? It's like, I don't have a precedent to tell you how that will work out if it will ever happen. So I don't have a clear answer. I get asked that all the time, and the answer is I don't know. We don't have a precedent. It's unlikely. It's a global marketplace. Anybody can buy uranium. And there's other entities that are sitting on a hell of a lot more uranium than SPUT is. Is the United States government going to force China to sell their uranium inventory because they've got 550 million pounds or whatever it is? Probably not. So, and that also would be, nuclear utilities have a lot of sway, and I'm not saying it's impossible that it will never happen, but I just don't have a great answer for it. It's certainly not something I believe is going to happen anytime soon, and probably never.
Okay. All right. Now, Zin wants to know any insight into the current USA bill to ban Russian imports and uranium.
It's being blocked still by Senator Cruz.
Oh, okay.
He's trying to force the hand of the Democrats to pass some other bill that has something entirely unrelated to the ban, because he knows that everybody wants the ban to pass. So Democrats and Republicans. So he's holding it up. I don't know if it's going to pass, when it's going to pass. We don't need it to pass. If it does passes, there are waivers. Whether or not those waivers will be easily granted to the industry, I don't know. The big question, of course, is if it passes, will Russia retaliate and actually cut off exports? That's, I'm not much of a geopolitical pundit, but looking at the writings of the nuclear analysts that do focus a lot on geopolitics, like UXC, they've been mentioning every single week for the last 3 months that it's not entirely impossible that Russia could do this. I mean, it's basically, we're in a proxy war with Russia right now. It's just not happening on our home turf. So if we say, hey, we're going to ban you guys, they might just be like, whatever, we're done. We're done sending it to you. These are all speculations. This is not something, I honestly, while it would be good for the United States to not rely on anyone for that matter, for 20% of our grid, it would be bad for the industry if Russia cut us off after we banned them. It would really shake things up in the short term. We would see an enormous price response. And because I feel highly confident we're going to see a price response anyways, just based on the supply and demand fundamentals, I'm not pulling for this. Should we not be relying on 25% of our annual needs coming from Russia for uranium? 100%. Does it need to be forced in a way like this? I don't know. I don't know. The industry wants it, actually, for the most part. There's a few laggards, utilities, that are still highly reliant on some near-term deliveries of enrichment coming from Russia. But the actual industry is in support of it, which is why it passed the House, why it's likely to pass the Senate when it does go to a vote. But yeah, we'll see. We'll see.
Okay. All right. So it's still in the process. It's being still held up by Cruz. And once this goes through, which it will, there is an off chance, a chance above zero, although what those odds are, we don't know, that Russia says, well, fine, we'll stop sending you anything from here on out. But that's not something that we're hoping for.
Yeah, and then the Russian uranium enrichment company 10X, they've already basically said to the market, we're going to honor our contracts no matter what, as long as we can. So it would have to come above them. The Russian uranium industry is highly, highly reliable. They've not missed a delivery ever in the history of their enrichment and world global uranium trade participation. They've never missed a delivery. So they want to remain as highly reliable to the global marketplace. So it would have to come up from Putin, basically.
Okay. Okay. Not from the companies themselves.
No.
Okay. Let's do, okay. I guess his question is more like principal risks. We've talked about these before. One that he proposes here, BH, he says China. There's a lot of rumors going on around global recession or depression. It looks like the China housing market is starting to take an absolute dump. Is there any risk that China doesn't build out their nuclear reactors, which is what we're factoring into future demand?
Yeah, I suppose we could see the reactor build out slow down. We haven't seen that yet. And right now they've got 25 reactors under construction currently. So if they were to do a complete 180 and halt construction of those reactors and say, we're not building any more for the time being, that would be a big signal to the market. That would be bearish. And the big question then would be, okay, based on their existing nuclear capacity of what they currently have, which is about 54, 55 gigawatts, then you can say, okay, now 600 million pounds of inventory seems a bit higher than it did when you expected them to hit 200 gigawatts by 2035. Very, very different scenario. So then you would want to start to look and see if any evidence of the Chinese selling into the market, if that were the case. Is that possible? I mean, anything's possible. So far, we haven't seen any evidence of that happening. And if they continue to build out these 25 that they're currently under construction right now, and if they all hit the grid in the next 4 or 5 years, nothing's going to change about the investment trajectory for the next 3, 4, 5 years, in my estimation. Yeah.
Okay. Okay. Not something you're worried about.
No, not as of now. Something to watch, I suppose, but.
Okay. All right. Let's move on to the crystal ball questions here. Baseball. What inning of the uranium bull run are we in?
That's hard to say. All I can really say is I don't think we're in a balanced market in terms of supply for 4 to 5 years, and that's being optimistic. So if you figure we're going off of the commodity bottom, which was 2016, that would tell you we're in inning 5 or 6. If you go off of the investment, the stocks really started to break out. I argue that the bull market started in December of 2020. If that's the case, then we're probably inning 4. So somewhere kind of, I would say, early to middle. But yeah, I don't know, Steve. I mean, I just don't know where the supply is going to come from until these big new mines, until we see actual production increases in a big way in Kazakhstan. Uzbeks ramp, BHP ramps, NextGen's Arrow is producing, Denison's Phoenix is producing. US ISR gets to 5 million pounds a year, and we start to see the Namibian projects being built, and DOS is producing. When all of that happens, we're close to a balanced market.
Okay. Yeah. Well,
So
once all
that's
that happens, we might be at the bottom of the eighth.
yeah, I mean, and between now and then, we're going to see volatility. We're going to see big runs up and probably decent retracements that are going to, make everybody nauseous. I mean, that's going to have, it's not like it's just going to be this slow grind higher for the next 5 years. It's going to be crazy. But the market's not balanced for 4 to 5 years minimum.
Okay. Okay. That's awesome news. Now, next crystal ball question. What's Justin's prediction for the uranium spot price at the end of 2024?
Ooh, my favorite question. $150.
Okay. All right. Okay. And let's see. When will the developers and explorers start catching up with Cameco and the uranium spot price? Is that 4 or 5 years, something like that?
When will they start to catch up with Cameco in terms of share returns or
And when will they
sorry,
start catching up? I think he's asking about like collectively as far as like production.
production? Well, Cameco has Cameco's in an interesting situation with uranium production. They've obviously vertically integrated with their acquisition of 49% of Westinghouse. They're actually one of the top holdings in this new NUKZ ETF. That's a nuclear industry ETF. And they don't hold any other miners, so they're holding Cameco because of their fuel fabrication, their conversion, and now their nuclear power plant building capacity with the Westinghouse acquisition. When will they catch up in terms of production? So, looking at uranium production for Cameco, they've got some struggles that I think we're going to hear about in a couple of weeks with their conference call. Primarily, in my opinion, that's Cigar Lake's phase one declining. So I think we're already hitting that. Now they had highlighted prior 2028 to 2030 is when phase one would be done for Cigar Lake. And the final years of that, the production pretty severely declines from Cigar Lake. So up until we started to hit these significant decline rates, lower grades, higher cost to maintain production levels from Cigar. Prior to that, Cigar was producing 18 million pounds a year pretty consistently. I think that they're going to report that they missed that because they revised down, I think in September, that they expected 16.3 out of Cigar for 2023. And I don't think they even hit that. So they've got Cigar Lake phase one declining. According to them, they've got phase two, right, kind of they can roll right into. My understanding, based on some anecdotal commentary from mining engineers, of which I am not, basically said phase two is lower grades, more difficult mining. So are they going to hit the previous Cigar numbers in phase two? Probably not. If they do, it'll be much more costly and more difficult. So they have that declining. McArthur River is good still for quite a few years. I think that goes out into kind of the early to mid 2030s before that starts to see decline rates. It's a monster. They have Rabbit Lake that they shuttered in 2017. I've heard whispers that there might be bringing that back at some point. Probably would be smart to do so. And they've got a decent smattering of assets in the United States. Not huge in terms of annual production, but they could go there. So I think on balance, the company is probably going to see similar levels of production, possibly slightly declining going forward. And that has to do with Cigar Lake's decline, the eventual decline of McArthur, and unless and until they jump into another very, very large project, which could be a JV with Orano, maybe taking out. They've been drilling on the other side of the border from ISO Energy's Hurricane. That deposit goes across the border. They are very tight-lipped about what's going on there. I'm sure they're hitting something. How much are they hitting? I don't know, but that deposit will be a mine someday. So there's that. Everybody's been screaming at them to take out NextGen for, I mean, since the COVID lows, which was a no-brainer during the COVID lows, pay all stock and take that thing over. They didn't do it. So will they ever? I don't know. But until and unless they move in a big way to a new large project, I think they're going to maintain barely and possibly decline going out towards the end of the decade. Overall production numbers between all of their projects, their Inkai joint venture with Kazatomprom, Cigar, MacArthur, and eventually we might see Rabbit Lake, we might see their US stuff come online in the next 2, 3, 4 years. When do the other producers meet Cameco's production? I mean, that's a hard question to answer. I mean, on balance, they already are combined, right? When are we going to see another big producer which can produce numbers like Cameco? That's NextGen. NextGen is saying Arrow's going to be producing in 2027. People in the industry that I speak with who have been in uranium mining for 40, 50 years say 2030 is optimistic. So probably somewhere in that time frame, late decade, we should see that next big mine producing, hopefully.
Okay. All right. So not for a while.
Yeah.
Now you mentioned nukes, the ETF. Someone wrote that as a question, and I Googled it. I thought it was a joke that someone would name an ETF nukes, but I guess
I
it's
know
not.
I saw you
That's
laugh you commented with laughing at it, but no,
I
it's
did. Yeah, I feel bad now. I thought he was joking. So that's a new one then, huh? As nukes.
Yeah, just launched.
Okay.
It's a nuclear industry. I'm forgetting the name off the top of my head. Like I said, the only uranium miner they hold is Cameco.
Oh, okay.
And they hold Centrus and Silex and Lightbridge, which is a fuel fabricator. Centrus and Silex are enrichers. Um, they hold a number of other companies that have some element related to either they're a nuclear utility or they're an SMR builder. It's kind of across the space, just this smattering of a bunch of companies that have absolutely anything to do with nuclear, basically.
Okay.
Yeah, it's interesting.
Okay. All right. I'll start pulling it up on Monday Market Moves. I thought it was a joke. Now I feel bad. Okay. Wrapping up. This question I thought was kind of interesting. I don't know if you would know the answer or not. Benji wants to know, how much more does the consumer have to pay per kilowatt hour when uranium spot price goes from $100 to $200? So if it doubles from here.
Let's see. I realize this is a hypothetical question. So the complicated answer is it depends on where the reactor is operating, right? Because there's certain markets are regulated, certain are not. Let's assume it's a free market and the direct costs of operating the plant are passed on to the consumer. So with uranium, let's use a clean number like 5%. It's usually around 4 to 5% of the overall operating budget is uranium itself. The entire fuel cycle is about 12 to 15% of the operating budget. So that's uranium, that's yellowcake, conversion, enrichment, deconversion, fuel fabrication. All of that is 13, 14, 15% of the overall budget. So 5% of the operating budget, operating cost. If 5% of the cost doubles in price, well, I suppose that's 5%, right? A 5% increase in cost to the if my math is correct,
Yeah.
to the ratepayers. I think it's somewhere around there. Yeah.
Okay.
All else being equal.
And that's why, that's a really good example of why this could double and it really doesn't affect the utilities too much. They still have to have it. It's such a small part of their expense. And so, even if this hypothetically does go from $100 to $200, it's not really that much more on the end user or to the utility itself.
That's correct. But really the big why is utilities cannot not have fuel because the cost of not operating the plant is far greater than the increased price for uranium. So I just retweeted something this morning from a gentleman named Malcolm Rawlingson. He's an old school, he used to work he's retired now. He used to work at a nuclear power plant. And basically he said in this tweet, a 1,000 megawatt reactor will produce 24,000 megawatt hours of power each day at a reasonable $60 per megawatt hour. That's a revenue loss of 1.44 million every single day. So for 90 days, you lose $130 million. 180 days, 260 million. You get the idea. So the cost of paying $200, $300 uranium instead of $100 uranium, while it's not nothing, and the utilities will not be happy about it, it's not an option to not run the plant. So they'll pay what they have to pay. And I've heard that verbatim from fuel buyers. Yes, it matters. Yes, it affects their bottom line, but they can't not buy it.
Okay, awesome. Well, thank you very much, Justin. If someone wants to sign up for your service, what can we expect?
Well, we focus 100% of our energy on this industry. So we connect with a very deep contact list within the industry, both on the investing side and the nuclear operational side. So we try to keep on the pulse of the physical market as much as possible. And that's basically what told us what we could expect during this first quarter of the year, which a lot of that has come to fruition. We put out a monthly newsletter that's very lengthy and in-depth that focuses largely on the fundamentals of the physical market. We have a focused list of securities that I don't have the numbers right off the top of my head, but like you mentioned, is north of 400%. I think we're pushing 420, 430% since inception. And we'll have our 5-year anniversary this coming summer of the newsletter, which is I'm very proud of. We host monthly members-only webinars. The past 2 that we've done, December and November's webinars were absolute crackers. We had in November, we had the guys from Ocean Wall, Nick Lawson and Ben Feingold. That was a brilliant webinar. In December, we had Dustin Garrow from Nuclear Fuel Associates. Both of those were highly, highly informative of what we're actually seeing right now in the market. So we've had hundreds of thank you emails from our members for those webinars alone. And honestly, just keeping people in this trade, because the volatility can be gut-wrenching, as you well know, sir. So yeah, we focus on this every single day. And we basically want to take all of the complex information that is spinning around the sector and try to distill it down into what you need to know as someone invested in the sector. That's the primary goal. And I think we're doing a pretty good job of it as of now.
Yes, yes. I've been saying, if you want to play the beta, buy URA. If you want to play the alpha, follow Justin. There is a link down in the pinned comments below. I want to grow my finances just like you. And if you use that link, the show gets a little bit of a kickback at absolutely no cost to you. And play the alpha. Thank you for tuning in. Hit the like and subscribe. And share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.